The year 2025 opened with unease. Global economic forecasts were cautious. Tensions between the United States and China simmered, building for years. Many feared a tipping point. International markets reflected this anxiety. Investors sought safer havens. The world watched the two giants, bracing for confrontation. In March, Washington announced sweeping new tariffs on Chinese goods. Electronics, machinery, and consumer products faced steep import duties. The scale was unprecedented, signaling a major escalation. The move caught many by surprise. The United States cited national security, protection of domestic industries, and intellectual property theft as reasons. The administration argued tariffs would level the playing field and create a fairer trade relationship. The global reaction was swift. The World Trade Organization and allied nations voiced concern. Stock markets worldwide saw immediate volatility. Businesses scrambled to understand the implications. Uncertainty became the new norm. The era of predictable global trade seemed over. This marked the beginning of a new, uncertain economic period. The world braced for the fallout. The United States took a significant gamble. The administration aimed to reshore manufacturing and reduce reliance on China. Tariffs were the chosen tool to pressure Beijing. The hope: economic pain would force China to change its policies. America first guided this approach, prioritizing domestic interests. Steel, aluminum, and tech industries were meant to benefit. The goal was to foster innovation and reduce dependence on foreign technology. But protectionism has side effects. Internal debate erupted. Some economists applauded, others warned of price hikes and retaliation. Businesses dependent on global trade voiced concern. Despite warnings, the administration pressed forward. The divisions mirrored the complexity of the issue. The world watched to see if this high-stakes strategy would succeed. The long-term effects remained uncertain. Would tariffs revive American industry or spark deeper trouble? The stakes were enormous. Every move was scrutinized by allies and rivals alike. The outcome would reshape the global economic order. The gamble had begun. China responded without hesitation. Beijing condemned the U.S. tariffs as unilateral and protectionist. Chinese officials warned of global economic damage. China positioned itself as a defender of free trade. Retaliatory tariffs targeted U.S. agricultural exports, soybeans, pork, grains, and politically sensitive sectors like cars and aircraft. China's response was calculated for maximum impact. It exposed U.S. vulnerabilities. Beyond tariffs, China accelerated the Belt and Road Initiative and invested in domestic technology. Reducing reliance on U.S. tech became urgent. The trade war became a catalyst for China's long-term plans. Beijing launched a global PR campaign, painting the U.S. as disruptive. China presented itself as a stable, reliable partner. Internally, it stressed resilience and unity. The message: China would not bow. It was prepared for a prolonged struggle. Many nations found China's narrative compelling. The confrontation was now global. The world's two largest economies were locked in a high-stakes standoff. The stakes had never been higher. The impact on U.S. industries was immediate. The American energy sector felt the strain as China slashed imports of LNG and crude oil. Price volatility hit home, stalling energy projects. The anticipated export boom vanished overnight. Agriculture suffered a devastating blow. China, the largest buyer of U.S. soybeans, closed its market. Prices for farm products plummeted. Debts mounted for farming families. Some faced foreclosure. The heartland felt the pain acutely. The U.S. automotive industry also suffered. Carmakers faced higher costs for imported components and retaliatory tariffs on exports. Production slowed, layoffs followed. The dream of a revitalized auto sector faded. The global supply chain's fragility was exposed. Ripple effects spread across the economy. Supply chains were disrupted. Input costs rose. Investment decisions were hampered by uncertainty. Expansion plans stalled. Small and medium-sized businesses were hit hardest. Many lacked the resources to absorb shocks. The overall economic climate grew more pessimistic. The promised benefits of tariffs seemed distant. The trade war's cost was mounting. U.S. industries faced a new reality. The future was more uncertain than ever. The trade war's impact was deeply personal. American farmers, once hopeful, now faced collapsing markets. Generational farms were suddenly at risk. Protests erupted in agricultural states. Farmers pleaded for government assistance as livelihoods vanished. Manufacturing workers saw mixed fortunes. Some in protected industries hoped for job growth, but retaliatory tariffs and rising costs led to layoffs elsewhere. The expected manufacturing boom never materialized. Consumers felt the pinch as prices for everyday goods rose. Tariffs on Chinese imports meant higher costs at the checkout. Household budgets were stretched thinner. Inflationary pressures built up. The trade war became a tangible burden for ordinary Americans. Political sentiment shifted. Discontent grew in states hit hardest. Public support for the trade war declined. Economic anxiety replaced initial patriotic fervor. The human cost was undeniable. The administration faced new political challenges. China had prepared for this moment. Years of diversifying export markets and building the Belt and Road Initiative paid off. New trade routes and partners reduced dependence on the U.S. Boosting domestic consumption became a priority. China shifted toward a more balanced economy, investing in infrastructure and encouraging spending. The trade war accelerated this transition. A strong internal market offered resilience. The Made in China 2025 initiative aimed for technological self-sufficiency. China poured resources into semiconductors, AI, and robotics. The urgency to innovate grew. Reliance on foreign tech shrank. China managed its narrative carefully. It highlighted U.S. protectionism and positioned itself as a champion of global trade. National unity and resilience were stressed at home. The message was clear and controlled. Domestic support held firm. China's global image improved among some nations. The trade war became a test of endurance and adaptability. China's long-term strategy was now in full motion. The world took notice. The 2025 trade war transformed U.S.-China relations. Trust eroded. Economic competition intensified. Suspicion replaced engagement. The path to cooperation grew harder. Global trade patterns realigned. New trade blocs formed as countries diversified partnerships. Supply chains regionalized for resilience. The dream of a fully integrated global economy faded. A fragmented, multipolar world emerged. International institutions like the WTO struggled. Bilateral and regional trade deals gained prominence. Multilateralism faced serious challenges. Nations prioritized their own interests. Global cooperation became more difficult. The legacy of the trade war was clear. The world became more aware of economic interdependence and its risks. Globalization was reevaluated. Economic security took precedence over efficiency. The balance had shifted. This new reality continues to shape global policies today.